Hey everyone, Microsoft is scheduled to report a quarterly financial update on July 30th, so I wanted to do a preview of what investors should expect from Microsoft when they announce earnings. Also, I wanted to update my recommendation for Microsoft stock, let you know if I think the stock is a buy before earnings come out or wait until after earnings come out to buy Microsoft stock. I'll answer that question in this video as well. I'll do all that in this brief video, so let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so in its latest investor update of its fiscal 2024 third quarter results, Microsoft reported $61.9 billion in revenue, which was up 17% from the same quarter the prior year. The company generates excellent gross profit margins, which were up by 18% year over year to $43.4 billion for a gross margin percentage of 70%. What's more, the company is profitable on an operating income basis, generating 45% operating profit margin and a 23% increase year over year to $27.6 billion. Microsoft has one of the most dominant businesses worldwide, great market share in Windows OEM sales, and a diversified business model that helps generate strong profit margins that protects those margins as well from competitors' encroachment. Now, one of the more exciting parts about Microsoft's business is the cloud and commercial revenue, the backlogs in the cloud. So what you'll notice here is commercial remaining performance obligations in the billions of dollars here jumped to $235 billion in the most recent update, and that was up by 30% year over year. 30% growth in this metric year over year, and that was up $13 billion from the previous quarter. Now, this is where the company is benefiting from the rising effectiveness of artificial intelligence. Its cloud business helps facilitate businesses that want to implement artificial intelligence, and its cloud business is where it generates increasing revenue even before the advent or the introduction of artificial intelligence. Microsoft's cloud business was growing quickly and gaining market share. Now, if you look at Microsoft cloud revenue specifically, that was at $35.1 billion in the most recent quarter, up from the third quarter of 2023, where it generated $28.5 billion. The gross margin in this segment is incredibly lucrative at 72% as well. Now, remember, these commercial remaining performance obligations, or RPOs, eventually turn into revenue. These are contracts signed by Microsoft's customers. They have agreed to purchase Microsoft services, and it's just a matter of time before these turn into revenue. This might be contracts, for example, a $5 billion deal over 5 years, where Microsoft will earn $1 billion every year for 5 years. Right? Now think about that on a broader scale, Microsoft's relationship with all of its customers and the deals that they sign for the next few years and how much of that will turn into revenue. So these growth in backlog numbers is great news for Microsoft. Now, one of the areas I've been watching closely with companies like Microsoft and others is the capital expenditures number. And that number jumped to $14 billion. And Microsoft said this was to support demand in their cloud and artificial intelligence offerings. Now, Microsoft is not the only one investing in artificial intelligence. Microsoft's big large cap tech peers, their hyperscaler peers, have also been increasing investments in capital expenditures for artificial intelligence and data centers and to support the growth of those businesses, because they're seeing demand from their customers for these services. So they're investing in these services because they know they can sell it to their end customers. I want to see if Microsoft gives us an update on their capital expenditures plans and if they're increasing their forecast for how much they expect to spend on artificial intelligence going forward. Did these last 3 months from the previous update to the current update, did it change anything at all? Did they become more or less optimistic about AI? I haven't seen any big changes that would suggest Microsoft should have increased or decreased their plans. It should be normal planning. It should be normal going. Now, I'll be paying close attention to see if there's any deviation, and that would be very company specific for Microsoft. Now, an interesting area for Microsoft is its more personal computing segment. Remember, this is where Microsoft generates revenue from Windows OEM sales, when it licenses out its Windows software to original equipment manufacturers like Dell. So the rise in PC sales in 2024 and beyond is going to fuel growth in this segment. Also, Windows is going to stop supporting one of their older versions, and so that could generate increasing sales from folks that are upgrading to a newer version of Windows or just upgrading their computer because it's an older computer. Either way, Microsoft will benefit as a result, and they're already seeing a turnaround. You notice here in the third quarter of fiscal year 2023, Windows OEM revenue declined by 28%. Then it declined by 12% in Q4. Then they saw an upturn in Q1 2024, 4% increase. Then in Q2, they saw an 11% increase. Q3, another 11% increase. And I wouldn't be surprised if Q4 and beyond, this rate of growth increases as well because of that factor of upgrading those older generation Windows licenses. Also, folks that bought computers in 2020 and 2021, there was a big surge in computer purchases during those 2 years because we were spending more time at home, working from home. So businesses sometimes helped people remotely work by giving them a computer for work. And some folks just bought their own computer because they're now working from home. And so that created a gap in 2023, and that's why sales fell. But starting in 2024, people need to upgrade those computers. Computers, remember, are upgraded every 4 to 6 years on average. And so we're right in the heart of that upgrade cycle from that big bulk of computer purchases in 2020 and 2021. So you're going to see this rebound in 2024. It's just getting started. 2025, it's going to accelerate. And 2026, I feel, will be the peak of this upgrade cycle, which is getting boosted or turbocharged by the rising effectiveness of artificial intelligence, because these PCs are now going to be infused with AI features. And then you're also getting that benefit from the replacement of those Windows that will no longer be supported by Microsoft. So this upgrade cycle, in my opinion, is going to be one of the biggest in the personal computing industry's history. Now that we know what to look for from Microsoft, let's check out its valuation. It's trading at a forward price to earnings of 28, which is right about fair value for this business going back all the way to 2022. You'll notice it was trading at higher valuations at forward PEs of 36. It was also trading at lower valuations of forward PEs of around 18. At 28, it's right about a little bit above the midpoint. But I also consider that today Microsoft's business is much stronger and in a much better position than it was in 2022, coming right off of that big cycle of personal computer purchases and heading into that gap time when those upgrades were going to be flat, when cloud spending was decreasing. Remember, there was a big fear that businesses were cutting back spending in 2022 and early 2023 because they were afraid of a recession. And so that was hurting Microsoft's cloud business. And then on top of that, their personal computing segment was suffering. So it was a much difficult time for Microsoft. Whereas now it's heading right into that big replacement cycle, and cloud revenue is jumping and it's getting that tailwind from artificial intelligence. So it's in a much better position. And so I like the valuation here at a forward PE of 28. I have Microsoft stock rated as a buy. Now, whether or not to buy before or after earnings is a personal choice. I'll tell you this, that going into earnings, buying before earnings is riskier than buying after earnings, because you're risking a loss of your money if you buy before earnings. And then earnings can come out and the valuations are more volatile, as you probably already know, following an earnings release. So you could lose 20% if the earnings come in much worse than expected. But if you wait to buy until after earnings, what you're risking is missing out on the gain, which I prefer. I'd rather miss out on a gain I'd rather take the risk of missing out on a gain rather than taking the risk of losing my capital. All right. And with this little time left between when you're watching this video and when the earnings come out, I generally advise to wait until after earnings, or you can split your purchase in two and buy half before earnings and half after earnings. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.